Someone wants to know, how does winning money from a casino or lottery affect my taxes?
Yeah, so it's income. It's just ordinary income. And
Mhm.
gambling is a little bit odd. So you have, depending on how you win it, you might get a form, you might not. There's a W-2G, which is gambling winnings. So if you win an actual lotto, like a state lotto, you'll get a W-2G. If you win a slot machine game like poker, you might not. And it's irrelevant as to why, but it's just a weird thing. But you are required to report everything regardless of whether you have a form or not. You can, so you report gambling earnings, gambling winnings, I actually say, on schedule because nobody wins 100% of the time. Except for one guy. I did see one. I'll tell you about that in a second. So if you have losses, then those go on your itemized deductions, Schedule A. So first rule, you're only allowed to deduct up to the amount that you win. So if you win $10,000 and you spent $13,000, then you can only deduct the $10,000 on your itemized deductions. So the extra three is rationale behind this. We don't want to incentivize people to spend all their money gambling. So let's just limit it to the amount of winnings, right? So that's thing number one. Thing number two is that since the Tax Cut and Jobs Act, with that doubled the standard deduction. So like this year for 2025, the standard deduction for single is $15,000. For a married filing joint is $30,000. And so if you don't meet that standard deduction, or if your item for your itemized deductions are just money that you spent, you get no special tax benefit from it. So let's say you win $10,000 and you have $13,000 worth of losses, but your itemized total is not enough to exceed the standard deduction. That 13,000 that you spent just evaporates. There's no tax benefit to it whatsoever. And the $10,000 just becomes income, right? So now you're paying tax on income that you didn't actually get because it's gambling and that's just how it is. You got to be mindful of that. Now, the one guy who didn't have any losses, and I'm hoping this is still true, I haven't talked to him in a number of years. There was a guy who comes in and he's got all of his papers, and I'm doing the tax return. He's got his W-2 and he's got a mortgage and whatever else. And then I'm halfway through his stack of papers, and there's a W-2G, and they're long, so they're not like a full sheet, and it's one third of a sheet. And so it says winnings in box one, 1,000,000,000. And I looked at it and I was like, am I seeing what I think I'm seeing? And yeah, sure enough, he won $1 million. And and it was one of those times the Powerball got to some ridiculous amount. And if you get everything, every number except the Powerball, it's a flat prize of $1 million. And that's what he got. That was the first time that he played the lottery. He bought two tickets and he won on one of them. He spent $4 to win $1 million. And he did not gamble after that. That is the one case that it worked out, and he didn't have any losses, and he was smart about it. And he bought a house cash, and then he put the rest into like Wells Fargo advisor and kept his day job and everything. So it's just the if you talk to the financial advisor types, like he did exactly what you should do when you win lottery, but nobody does except for this one guy. If you do win a big prize, as a by the way, a lot of times they will withhold 20% as just like off the top. 20% is not enough. Be aware that your tax rate is actually going to be higher. People say, "Oh yeah, they took the taxes out. I'm fine." No, you're not. They took taxes. They took some taxes out. They did
But
not
not
take out
everything.
enough. Yeah,
Right. Yeah.
you have to before you cash the ticket. Talk to an accountant. Talk to a lawyer. Right. Those two should be your first calls, and they'll keep you as safe as possible.
Yeah. Because they'll spend the money and then they have to pay all that money back. Well,
Yeah,
not all of it, most of
yeah,
it.
that can be a problem.
Yeah. So 5:52, do we have some
I
time
don't
for
know. Do
one
we
more
have a
question?
quick one? Some of them have been
Uh,
quick today.
so we have a question on stock gains.
Okay.
Someone wants to know, how do I avoid paying taxes on stock gains?
You don't have
I
gains.
was gonna say that
So,
too, but
so there's a couple of different things. So one is that if it's long term, it'll get long-term capital gains tax. 1% long-term capital gains users realize those losses, and those can count to that strategy to an art form, as if you want to do direct index investing. Those are the two basic ways. Otherwise, if you sell something and you have a gain, and a gain on others, and you come out with a positive number, and your income is such that you can pay taxes. Maybe you have offsetting other things, offsetting losses from something else. Maybe you bought the Tesla this year and you have $7,500 worth of tax credit. There could be other mitigating factors, but purely on the stock basis alone, those two elements. So are your income threshold for 0% capital gains tax and offsetting losses with tax loss harvesting. So those are the two basic arrangements.